we got to discuss this stuff because this is happening very quickly.
We are seeing corporations, we didn't expect this. We expected institutional interest, but we didn't expect corporations to substitute Bitcoin for cash.
Our working assumption from the beginning was that, and this was based on meeting with them, meeting regulators, both state and local and federal, was that no regulator wanted to be blamed from preventing the next big technology breakthrough to happen in the US. And that has proven true. Now we've got Chairman Gary Gensler. I'm really happy he understands crypto and understands the merits of Bitcoin in particular. He is a regulator though, and he's a hardcore regulator. What Coinbase did, I mean, I was shocked when I saw Wells notice. Are you kidding? They haven't even released the product. Like, what is this? And I think what that Wells notice is doing, it's a call out by regulators saying, we got to discuss this stuff because this is happening very quickly. And I think we are going to bring courts into the system. This happened in Canada. A company called 3iQ sued the regulator there and won in court. So they were able to issue Bitcoin ETFs and closed-end funds and Ether as well. So I am beginning to think that Coinbase doesn't mind this at all. And if you saw the stock reaction, it hardly budged.
Bitcoin, more in the fintech realm. We are seeing corporations, we didn't expect this. We expected institutional interest, but we didn't expect corporations to substitute Bitcoin for cash. MicroStrategy was the first. All of its cash is now in Bitcoin. And in fact, it did an offering so that it could buy more Bitcoin. Square has put 5% of its assets into Bitcoin. And we're seeing more mature companies like PayPal enabling the buying and selling of Bitcoin on its platform, as Cash App does as well. Well, if companies in the S&P 500 were to put 1% of their cash into Bitcoin, that would increase the price of Bitcoin by $40,000. Today, it's close to $30,000. So that's more than a double right there. If we saw 10%, of course, that would add 400,000. And I just told you, MicroStrategy has put all of its cash in. Perhaps emerging markets will be faster in terms of adoption, but we have been very surprised at how quickly this has happened in the United States. Institutions are going to have a significant impact on Bitcoin's price. We're seeing all kinds of evidence today. I just gave you some about corporate cash, but we have the OCC. Last July, they allowed custody banks to federally chartered banks to custody Bitcoin. And just within the last month, they have allowed banks to actually become nodes on any public blockchain so that they can enable much less expensive and efficient settlement. So that is again a little faster than we would have expected. We've seen Fidelity. The infrastructure has certainly been moving into place for a while. Fidelity, the Intercontinental ICE, the Intercontinental Exchange, the CME, and Cambridge. The consultant wrote a paper about, it was a little more than a year ago, basically telling institutions, hey, this could be a new asset class. And it has a very low correlation. In fact, it has the lowest correlation if you compare Bitcoin with all the other major asset classes out there. It has the lowest correlations of any other combination. So we believe that here you can see that if our analysis on how institutions will look at allocating to this space is correct, and this is using a Monte Carlo simulation, institutional involvement could increase the price of Bitcoin. Again, it's 30,000 now, by 200,000 if they want to minimize volatility, to 500,000 if they want to maximize their Sharpe ratios.
We go through soul searching times like this and scrape the models, and yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
If we're right and companies continue to diversify their cash into something like Bitcoin, and institutional investors start allocating 5% of their funds towards, I'll just say Bitcoin for right now, because we did that, we framed it for Bitcoin, could be for other cryptos as well. We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000.